Understanding Gaap insurance. If your insured car is totaled in an accident, or stolen and unrecovered, your auto insurance may give you a settlement based on the car's actual cash value or ACV, not what you paid for it. Since cars depreciate quickly, your settlement may not cover what you still owe on your auto loan or lease. That could leave you with no car and a big bill to pay. What is Gaap insurance? Gaap insurance is an optional, add-on car insurance coverage that can help certain drivers cover the gap between the amount they owe on their car and the car's actual cash value in the event of an accident. A car's actual cash value is the car's monetary value at the time of the accident, not the car's original price. Gaap coverage adds more protection to your auto policy. Gaap insurance is an optional insurance coverage for newer cars that can be added to your collision insurance policy. It may pay the difference between the balance of a lease or loan due on a vehicle and what your insurance company pays, if the car is considered a covered total loss. Without proper coverage, the gap between what you have paid and what you owe can be substantial. Your lender may require Gaap insurance. If you financed your vehicle with a car loan, your lender might require loan Gaap insurance in addition to your collision and comprehensive coverage. If you lease your vehicle, lease Gaap insurance may already be included in the cost. Check your coverage paperwork to be sure. Actual cash value determines how much your policy pays. Standard comprehensive and collision car insurance policies help pay for the replacement of your vehicle, if it is a covered total loss, up to the limits of your policy and the car's actual cash value. ACV is equal to the cost of the car when it was new, minus depreciation for age, mileage, physical condition and other factors. After just a year, the ACV of your car can be thousands less than what you paid for it, which can leave you with an expensive loan or lease balance. This coverage is available in select states and applies to vehicles 6 years old or less. Let's say your car costs $35,000 when new, and you currently owe $30,000. If the car is totaled, the ACV of the vehicle may be only $25,000. You have a deductible of $500, so the car accident settlement is $24,500. Your Gaap insurance coverage may pay the remaining $5,500 on the loan instead of having to come up with the money yourself. What does Gaap insurance cover? The basic concept behind Gaap insurance is easy enough to understand, but what exactly does it cover? Gaap insurance coverage is quite versatile, but be aware that it only covers damage to your vehicle, not other property or bodily injuries resulting from an accident. Here are a few common questions related to Gaap insurance coverage. Does Gaap insurance cover theft? Yes, Gaap insurance may cover theft in the event your car is stolen and unrecovered. Does Gaap insurance cover deductible costs? No. Even in the event of an accident covered by your Gaap insurance policy, you would still have to pay your deductible. In other words, if the Gaap reimbursement amount is $4,000 and your deductible is $500, your total reimbursement amount would be $3,500. Does Gaap insurance cover engine failure? No. Gaap insurance is only used in the event of a total loss from a covered accident, not for mechanical repairs. Does Gaap insurance cover death? No. Gaap insurance is only applicable to vehicle losses and does not cover bodily injuries, medical expenses, lost wages or funeral costs. Does Gaap insurance cover negative equity? Yes. Negative equity is another term for the gap between what you owe on your auto loan and the car actual value.